welcome to Capital Market Live on Channels Television. I'm Will Ibong, and as always, let's check in on the markets. We begin with Europe, where stocks were mixed on Friday as the buoyance triggered by a softer-than-expected U.S. Consumer Price Index reading fizzled out. The German DAX closed Friday higher by 0.56%. The UK's FTSE 100 fell 0.78%, while France's CAC 40 rose more than 0.5%. We flip over to Asia, where Hong Kong stocks jumped more than 7% as Chinese state media reported COVID measures for travel will be eased. Shares in the Asia-Pacific also rose after the release of U.S. inflation data in October raised investors' hopes that inflation has peaked. The Hang Seng Index jumped 7.74% to close at 17,325 points. The Hang Seng Tech Index surged 10.05% to close. In mainland China, the Shenzhen Component added 2.12% to end its session, while the Shanghai Composite Index gained 1.69%. Over in Japan, we saw the Nikkei 225 closed up 2.98% at 28,263 points. Now in the U.S., the S&P 500 closed out its best week since June as a report on Thursday showing slowing inflation raised hopes that the Federal Reserve would soon slow its tightening campaign. The broader market index, that's the S&P 500, added 0.9% to close at 3,992 points. This brought its gain for the week to 5.9%, its best week since the one ended June the 24th this year. The Nasdaq Composite added about 1.9% to end at 11,323.33 points as investors snapped up tech shares on hopes interest rates would ease. The Dow Jones Industrial Average gained 0.1%, closing at 33,747 points. Tech stocks on Friday shook off a decline in cryptocurrencies. We know that virtual currencies tumbled sharply this week and once again came under pressure on Friday after FTX filed for bankruptcy protection and CEO Sam Bankman-Fried resigned. Bitcoin and Ether both declined. However, all of the indexes posted a winning week. The Dow was up 4.1% on a weekly basis, while the Nasdaq Composite advanced 8.1%. The week marked a resumption of a comeback rally for the bear market, which began in mid-October. Now we go over to the domestic equities market, where the local bourse took a negative turn this week as the loss recorded on the second trading day proved sufficient in wiping off the cumulative 1.2% gain as of Friday. Now, precisely, the all-share index declined by 0.68% to 43,968.75 points. This was driven by sell-offs in Guinness, flour mills, Nigerian breweries, MTN Nigeria, and Dangote Cement. Consequently, the month-to-date and year-to-date results printed a 0.3%. That's positive for the month-to-date and 2.9% for the year-to-date return, respectively. Similarly, we saw activity levels were weaker than the prior week. We saw trading volume and value declined by 21.9% and 24.5% week-on-week. Elsewhere, the performances across sectors were broadly negative as most key indexes recorded losses, except for the banking index, which posted a 0.17% gain. Unity Bank topped the gainers chart for the week, while Prestige Assurance led the decliners. Now, the trio of Access Holdings, Sterling Bank, and Transnational Corporation contributed 52.44% and 23.57% to the total volume and value traded in the week. Similarly, the NASD OTC securities market, as the unlisted equities market, closed the second week in November negative. The NASD securities index fell by 0.77%. The exchange lost 9.05 billion naira in value. However, volume and value rose sharply. Volume traded stood at 234.89 million units, while value traded for the week rose to 39.1 million naira. There were no advances this week. However, we saw Friesland, Campina, Wanko that made significant losses this week. Led two other sore losers. And now we saw Lighthouse Financial Services PLC and Central Securities Clearing System among the top 5 stocks traded by volume for the week. Now, joining me to review the market activities for the week and drill down some of the numbers is Mr. Kofi Garba, Chief Executive Officer, APT Securities Limited. Always good to have you on the program, Mr. Garba.
Pleasure to you, sir.
Mr. Garba, we've seen the equities market close the second week negative. The first week was positive, but we've also seen about 27 stocks appreciating in price compared to 20 we saw last week. Does this indicate, show that the market is going to pick up somehow?
Yes, definitely sure the market is likely going to pick the coming week. You know, it's common. Our market is played majorly by traders. And the traders look at opportunity. You remember at the beginning of the week, the market started where they're rising in the dollar. So trust Nigerians, they switch into that. But toward the end of the week, it doesn't last. And therefore, we hope that by next week, the capital market will pick up the rising.
So what trigger does the market need to actually push it? Because right now it seems there is no actual direction that the market is taking.
Well, gradually we can see what happened in the last trading day, particularly Friday. It shows you that when the rising in the exchange rate goes down, now the traders move into the equity. And I believe that you will see more positive response for the coming week for so many reasons. Liquidity is likely to come back, and we are expecting more volume and more value will likely recognize in the coming week.
Unity Bank, I particularly observed that stayed on the top gainers list almost 3 days in a row. What is driving, why are investors bullish on Unity Bank at the moment? Because it's not even a tier 1 or tier 2 bank.
Well, this is part of the irrational behavior of the market. It goes beyond all the fundamental and the technical analysis. Neither the technical analysis or the fundamental analysis can predict that Unity Bank can go there. Because first and foremost, if you look at their performance, it's just marginal. And this is the only bank that is heavily with the shareholders negative. In fact, we call it at the mercy of the CBN, because if the CBN decided today to hands up, there will be no more. But since the CBN decided to allow it to work, it exists, but there is nothing for the shareholders. So why should it gain 35%? There is no any reason that a technical analyst can tell you. I just consider it a mere speculation. And not only that one, even the subsequent on the Royal Exchange, if you look at their performance, it has gone down both in the gross income and the profit before tax and after tax, but yet it gained about 22%. So call a technical analysis. Why did it go? No answer for that. Call the fundamental analyst. Why did it go? There is nothing fundamental go. It's just a mere, we see it a mere speculation. And don't forget that this is a stock that are trading in a very low price. So even with 1 million, it can make you to move a lot of quantity because of the low price, and some people take advantage of that.
So it's more like speculations in the market.
Yeah, really.
Whales are trying to push
the price. It's really a speculation because there is nothing fundamental. And speculation can go for anything.
So what you're saying is that investors, before they buy, they should look. But what if at the moment they can make enough profits, to smile to the bank?
Let me tell you the truth of the matter. No magic for that bank to turn the negative shareholders into positive, because we have not seen it. You are not talking of 2 to 3 billion. You are talking of 260 billion negative shareholders. So when do you expect such bank to recover this? And there wasn't any much provision that you are expecting that in the likelihood they will recover it, and therefore they will just write it back like what it did to the first bank. So I don't see it. It's just a mere speculation, and I'm not surprised because the price went as high as 64, coming down to 44, going back to 57. It's not impossible.
So we'll come back to Unity maybe some other time, but let's look at some of the companies that have already declared their interim dividends. Quite interesting to see that after posting the interim dividend result, there was no price appreciation. Why is that? Could you just tell us why?
Well, the truth of the matter, I think there is lack of liquidity in the market. And when there is lack of liquidity, you hardly see appreciation in the price. Because the truth of the matter, interim dividend is telling you that don't wait for the final dividend. Let me give you part of it. Take, for instance, Nestle Food. It paid 25 naira dividend, interim dividend. Yet the price, instead of rising, it come down. The same thing was a stock like Seblat and Airtel. Each of them, they gave over 9 naira dividend. None of them gained. They rather lost. So I see it more that lack of liquidity, and people try to be smart in the foreign exchange. So some people are rushing to sell this and going into that. Now that the exchange has gone down, and all what people hope is not likely going to be there, it end up trading as low as 700. So it shows you that there is likely going to have a reverse. And for those companies that have not marked down for the internal dividend, I'm not surprised if they start gaining by next week.
Oh, but if we look at the macroeconomics, even seeing the last PMI results, as in reading, we saw that companies are beginning to pick up. There is still activity in, you understand, in the countries. And what we see, that sales have also picked up. So this country is posting interim dividend. Are you saying that they should no longer post interim dividend because of the stock prices? Why are people not gingered or well, compelled to buy the stocks after they posted interim dividend? This is supposed to be a motivation, right?
Yes.
For investors to take position. Can you just say why are investors sluggish to buy the stocks?
I think the sluggish of the investors is generally because of lack of liquidity. And when you lack the money, they say cash is king. And when you have the cash, you take advantage of it. But because they lack the liquidity, they couldn't take advantage of it. And the truth of the matter is for the interest of the investors to see that those companies have declared interim dividend rewarded accordingly. Because we have seen new entrants. Presco have never declared interim dividend, but it declared 2 naira.
So you saying Presco has never declared an interim dividend before?
But they did it now. AXA Mansa declared 4 kobo, which they have not. Go and check the history of PZ. For the last 10 years, I have never seen PZ declaring interim dividend. But now it declared 1 naira. Instead, this stock to be rewarded, they end up losing. And this is why you see a reverse in the Lafarge. Lafarge last year by this year declared 1 naira dividend. But this year they choose not to declare. And it's not for the interest of the minority shareholders to see that interim dividend is not declared until the year end. Because in declaring interim dividends, it makes you to be more comfortable rather than placing your money in the fixed income where you get 6 months rental or interest. You now go into the equity and get interim dividend and final dividend. Because any company that give you interim dividend, it assures you that you will get a better final dividend. And it has been the practice. But the market refused to declare that simply because they lack the liquidity, and the institutional investors who are supposed to play the same role, they decided to shift into the fixed income.
Well, we've seen an increase, a jump in the fixed income space. So it's natural for these institutional investors to go where they will get more returns, isn't it, Mr. Garba?
They get more return in equities. Most of the pension funds that have done very well, they do it not because of the fixed income, but because they play a greater role in their equity. We are just talking of a company that gained 35% in just a week. Where will we ever get even 20% in fixed income? It's not possible. You are talking per annum. This is we are talking per week. So if you can get 35%, it can apply to any other stock. So if you invest in that stock and it gain even 20%, you are much better than in the fixed income. And it is clear to the PFs that if they want to make money, they should play the equity, but equity is market to market. So whenever the price go down, it affects their performance.
But you know the PFAs, they have retirees' money, pensions at their hands. They don't want to play the risky market, which is the equities market, which is quite volatile. They need a safe haven where you're in the fixed income space seems, the perfect place for them to put their money and rest assured that nothing is going to put it down.
There is no safe haven. Let me tell you, you can only have safe haven if you have a controlled inflation. Where the inflation is sitting above 20%, where is the safe haven? You earn 15% and the inflation is 20%, you are in a negative return. If the retiree sees this, they will raise alarm that, look, don't put me in a negative return because I want a return that hedges me against inflation, and the only institution that provides you that easily is the equity.
Wow.
Not fixed income.
While we listen to the cry of the investors, we're going to take a quick break. Next, the Nigerian exchange began its first physical trading after more than 2 years of trading remotely. That conversation next after the break. Just stay with us. This is Capital Markets.
Our website, channelstv.com, has more information on our top stories and others. Subscribe and watch Channels Television's live stream on YouTube and other social media platforms using your mobile device browser. Or download the Channels TV app for Android and iOS devices from their respective stores. You can also watch us via your smart TV platforms on Apple TV, Android TV, Fire TV, and Roku. Channels Television, ubiquitous. It begins when news breaks, but there's much more in the details. That's where Special Report comes into the picture, locating source and destination of the news.
Something needs to be done. We don't need to negotiate that. Government should see what we are doing.
Bringing your perspective to the fore.
If those arrested are those protesting against police brutality, I would say that such arrest is unjustified.
Exploring angles that may provide solutions, giving you the opportunity to understand the issues and make decisions. Watch Special Report on Channels Television.
Welcome back. Welcome back. This week, the Nigerian exchange reopened the trading floor for physical trading on Monday. That's the first since the COVID-19 pandemic, and stockbrokers have been trading remotely for the past 32 months. And to many, it was a relief to be back on the floor of the exchange. Mr. Kofi Garba is still here with me to discuss it. Mr. Kofi Garba, how did they feel coming back on the floor of the exchange, and what difference did that make for the week? Did that make any changes in the trading activities or in the pattern of trading, and did we see any change in the overall close? Obviously, you're going to answer that.
We are highly excited because traditionally we come to the floor, we exchange word, and we also share information among ourselves. One thing that exchange is moved by the information, so we call it information-driven market. Information is of two types. There is formal information that you get through the exchange. Even if you are at home, you can go through the exchange, like the corporate action, like change of the directors, and any other major change. But one side of the exchange information is the hearsay. You cannot take it from the market. And the hearsay, you cannot get it in the paper, you cannot get it in the radio, neither will the television say the hearsay. So the hearsay is what normally you get it when you go to the trading floor. And those one trigger the changes in the market. So I can say that you will get hearsay, and these affect the trading pattern of our market exchange.
So also, the reopening coincided with the 30th anniversary of this Chartered Institute of Stockbrokers, and we did catch up with the president of the Chartered Institute of Stockbrokers, that's Mr. Oluwole Adeosun, and he highlighted some of the challenges that equity traders are facing in the equities market. Let's take a listen.
Thank you. And today is a very golden day. It's a unique.
Well, of course, we have to adjust to advent of technology. COVID came suddenly, but we thank God that we have an exchange that is internet technology ready. The stock exchange is what we call the barometer of the economy. The economy now is rather challenged by a lot of factors such as foreign exchange, factors such as the interest rate, factors such as logistics issue. All these have combined to, if you look at the fiscal and monetary policies that have been in place even this year, all these factors have combined to have an effect on the level of transactions that investors have done through the equities market. But on the other side, stockbrokers trade across all the exchanges, the fixed income market, the commodities market, the equities market. So if one aspect of the market is down, like the equities now, because of the higher interest rates that we have in the economy now on account of the increase of the MPR 3 times now by the Monetary Policy Committee of the Central Bank. So there is a natural gravitation of investors from the equities market onto the fixed income market.
That was the president of the Chartered Institute of Stockbrokers, Mr. Oluwole Adeosun. So you were also there, Mr. Garba. What are your thoughts about what he said? I know he has mentioned the FX liquidity issues, scarcity where we had, and also the hike in interest rates, which is actually, very important, which actually determines the trends in the market. What do you think? What are your thoughts about what he has said? Do you agree with him?
Well, I agree with him, but in addition to that, one of the major players of the capital market, particularly the equity, is the margin trading. And the margin trading is not there. So we need the monetary aspect of it, the monetary policy, particularly the CBN, to review it and see it. In US today, the margin trading has moved by more than 300% compared to what was obtained in 2008. Do you know that today our exchange trading is less than 50% of what we are doing in 2008, 2007? That time we had a margin trading. And we need this relief by the monetary policy to allow financial instruments to go into margin trading. We all learn our lesson. Both the banking and the investors, we learn and we move forward. Why should you retard us and stop this margin trading for over 15 years today? If this is released, I believe the volume will change and many people will take position.
So we also see, just particularly Union Bank. I saw that in the news. It's quite interesting that it has kicked off its Africa expansion with Attijari Fawa Bank in Morocco. Why the choice of this bank? And what are the value-enhancing opportunities that it has for the Nigerian market and rural investors?
If you look at it, we all go to Europe. But today, one of the key door to Europe is Morocco. And we have seen what Morocco added value to Nigerian fertilizers company. Today, over 50 fertilizing company in Nigeria, they are producing because of the agreement signed by the president with the Morocco. So I see wisdom for Union Bank going extra mile. Don't forget that Morocco also, they are into escal fund. And the escal fund is getting background here, particularly in Nigeria. Initially, it was Jaiz. Today, we have Taj Bank, we have Lotus Bank, and more are likely coming. Even the Sterling Bank, the Stambika, they have ethical fund. So I see wisdom for Union Bank going to Morocco, and I believe that will add more value to our transaction within the Africa and beyond.
Speaking of which, let's not forget that Union Bank, just their takeover bid at 7 Naira, which is priced at 7 Naira, is closing on November the 23rd. That's the deadline for that. You see that the investors, and when I looked at the form or the letter that was sent, the investors have to apply for the mandatory takeover. Is that the regular tradition? Is that the norm for investors to apply for that?
That is not the norms. We all know it. Mandatory takeover, you have no choice. When it is mandatory, it's so like compulsory. Whether you like it or not, you must go. It happened when 7-Up did the mandatory takeover. Whether you apply or not, you get your money. And today, they are no longer listed. The same thing applied to Nigerian bottling company, Coca-Cola. Even the recent one, the Dangote Flour, when Olam decided to get out of the listing, they just give a mandatory takeover. Whether you apply or not, you get it. But in the case of the Union Bank, it's different. Different in the sense that the company remain listed. So I don't even understand the wisdom behind mandatory. Rather, you give me an option. Because if you did not apply, they will allow you to continue trading. So for those who won't take the advantage of the bid of 7 Naira, they apply. If you don't apply, so why mandatory? Mandatory is supposed to be compulsory for all. And what we know, the norms and the standard before us is that once there is mandatory, whether you apply or not, you just go to the registrar and pay you your money. If you don't go it is gone. But in the case of the Union Bank, it's different. Maybe the financial advisor have to think back because this is supposed to follow with the scheme.
So why is it different? Why are they not following the rules or the code of the SEC at the moment?
You see, the truth of the matter that I put much blame to the financial advisor. The financial advisor knows this, and that is the norms. All over, where you say mandatory, you don't need to apply. Apply or not, the registrar will just credit you. It applied to many companies. I can tell you as many as more than 10 companies in the Nigerian exchange that had mandatory takeover. And what we had is that whether you apply or not, you get your money.
So what
but
makes
in
this
this one,
difference?
because the financial advisor did not advise, now they have to come with another scheme. Because this one will not help the situation. In the sense that today you are talking of 6% of the Union Bank. I can tell you 50% of these 6% are not living. Most of them are dead people, so the family did not do the processing or the letter of administration, and therefore it remained there in their name. So how do you expect a dead person to sign a mandatory form? Of course you will not. So, but if you do a scheme of things, just pay them their money. Anytime they get ready, go to the registrar and collect your money, and the chapter is closed.
Well, you just mentioned that some of these people already passed away.
Yes.
So even if the families, how would they know that their accounts have been credited? The
As
families of these people
long as they have an investment there, the lists are there. They can go to the registrar, make an inquiry, they will see it. And most of the owners, they have their previous dividend warrant. And they have share certificate, physical one. You can take either of these. Once you perfect your letter of administration, go to the registrar, he will pay you. So how do you expect a dead person to sign mandatory form? So that is why I said they have to come with another scheme, because currently they have only 6%. With 6%, it's fall below the standard of the exchange. The exchange want every shareholder to have 20% available. Already they have 93%, which they are not going to trade. So the remaining 6%, if they continue, they will always be marked down as below the standard. And I believe nobody will like to fall below the standard for just not your own fault.
Interesting development there, Mr. Garba. We'll definitely follow up on this and know how this will pan out. But we'll just, because we have to go now, to Mr. Garba Mr. Kofi Garba, Chief Executive Officer, APT Securities Limited. Many thanks for coming on the program and sharing your thoughts with us.
Thank you for having me.
So, and that's it on Capital Market. Do join us same time next week for another edition. But don't forget to check us out and follow us on our social media pages. And you can watch this program and more on our YouTube page. I'm Will Ibang. Bye for now.